I'm Joanna Drake with Magnify Ventures and co-founder of Raise Global. Today, I'm delighted to shine a light on Erin Harkless Moore, a veteran Raise producer. You'll probably recognize her from last year's summit where she emceed our virtual pitch presentations. Erin has a remarkable background, having worked with some of the most respected investment firms and clients in the industry. She's also one of the most approachable and genuinely kind LPs in our Raise community. So if Ben Black is at the top of my list when it comes to fundraising advice, Erin is a close second. Erin, let's dive into your background a bit. In broad strokes, can you outline the journey that brought you to your current role overseeing venture fund investments for Pivotal Ventures?
Sure. Thanks, Joanna. It's great to be with you today and with the Raise community. My background, I started my career on Wall Street, and I like to say that I don't think anyone, at least I know I didn't right out of college, knows that they want to be an allocator of capital and sit on the LP side of the table. But I was, I think, equal parts luck and some hard work involved to get that first role on Wall Street that really launched me on this path that I've been so excited to be on for now over a decade and a half plus into my career. In the earlier stages, though, there was a much clearer line between what I like to call sort of the purely financial and the more socially oriented impact side of my life and career. And I candidly sort of saw them as two distinct tracks. The social activism and equity work, DEI work was the sort of things I was doing on the weekends and in my volunteer and spare time. And it didn't really directly intersect with how I was allocating capital, conducting diligence on fund managers and building portfolios. I've been thrilled, again, personally and professionally, that over the last decade, I've been able to achieve greater harmony and alignment, and seeing both my values and that great degree of financial rigor and analysis that goes into the diligence that I've done or I do in my job really kind of come together. And in some ways, Pivotal, which I joined about a year ago, has been the sort of ultimate culmination of that alignment and bringing those pieces together, driving social progress and having impact, but also seeking market rate financial returns. So our ultimate goal at Pivotal Ventures and my goal in leading our investment efforts is to pave a way for more companies to do what we're doing, which is deploying capital, again, that's going to drive returns, but also have a positive social impact. So I feel pretty lucky every day that I get to come to work and dig into problems, explore new products, ideas, get to interact with amazing GPs like you and others in the Raise community and build our portfolio at Pivotal Ventures.
Well, needless to say, we are big fans across the Raise team of Pivotal's mission to advance social progress and enhance women's power and influence. But for those who aren't yet familiar, Erin, can you walk us through the specific prongs of your strategy?
Sure. So we believe investments in venture capital specifically are a tool to advance social progress in our portfolio and also a sector of interest to expand women's power and influence and strengthen the well-being of all people in the United States, which are the two strategic outcomes that we're driving towards at Pivotal Ventures. So our venture investing work and the capital that we deploy, again, with that market rate return-seeking lens, aligns very closely against the programmatic strategies where we're also deploying philanthropic capital at Pivotal. And I think our structure gives us a lot of flexibility to do both and seed the capital where it's most needed and most impactful. But some examples of that include investments to help young people manage their mental health and their well-being, those that support caregiving innovation and modern families, those that expand representation of women in tech. All examples, and I think pillars of our strategic focus at Pivotal Ventures. We deploy capital to both fund and direct investments in our venture portfolio at Pivotal. And to date, we focus primarily on the fund investments and have opportunistically invested directly in companies or co-invested alongside our partners. And that focus has led us, again, in our drive to expand women's power and influence, to focus on female-led funds, predominantly both established and emerging managers, although shifting the balance, I'd say, over the last several years to more emerging managers. And again, another reason we're happy participants and engaged in the RAISE community.
What an incredible platform. Thank you for that context, and what a great gig you have. Let's dive into specific investing processes and decisions, starting with, what are your most important criteria when you're considering backing a new emerging manager? From specialization to generalist, stage, geographic focus, diversity, can you share a couple of your critical criteria?
Sure. So we have several criteria that really inform that top of the funnel. One, as I mentioned, the diversity of the team, and specifically seeing significant female leadership or ownership of the GP is a foundational criteria for us to invest. Two, we're focused at the early stage. So pre-seed, seed, Series A has been where we've deployed our capital to date. And again, I suspect where we'll continue to focus for the time being. In terms of fund size, we're looking at a minimum of around 25 million to invest. But I will say that also, very much open to engaging with fund managers that are below that threshold and start to build the relationship. But that is one of our criteria for investment, is having that minimum $25 million fund size. In terms of other criteria of note, I'd say, generally open to both generalist firms and those that have more of a specialist focus. I think particularly on the specialization side, where we see some intersection with our programmatic and thematic areas of interest and priorities. Team-wise, we want to see healthy team and partnership dynamics, and that can be multiple GPs, also a solo GP as well, and trying to understand their vision for how they're going to scale and grow their team and their fund. But that's something else that we're open to both, I should say. So it's not a criteria that will exclude solo GPs from our funnel.
Erin, quick follow-up just for those who are listening. How about geographic criteria? Since, as you know, we're continuing to advance the boundaries of RAISE and be more and more global each year.
Yes, no, good flag, Joanna. As I neglected to mention, US focus currently is our number one geographic criteria. Again, I'm always interested to connect and get to know fund managers that might be operating outside of the US, but our strategic outcomes, again, are domestically focused at this point in time. So looking for funds that are based here and investing in the States. Within that, though, from a geographic standpoint, very much open to people that are investing and located all over the country. And I think particularly interested in getting to know and support and build tech ecosystems outside of the Bay Area and New York. Don't mean that to say that we are not investing in those areas. We definitely are in those communities, but whether you're in the Southeast or the Midwest, definitely very much open to building those communities and supporting fund managers in those markets as well.
Well, as you know, we are every year studiously expanding our emerging fund manager representation outside of Silicon Valley. So happy to hear you double click on new geographic areas that are becoming vibrant from an emerging fund perspective. We always get asked as emerging fund managers in regards to sourcing deals, how do you source your new managers?
We source investment opportunities through both our external and internal networks at Pivotal Ventures. As I mentioned at the outset, I've spent now many years and getting increasingly a little bit more gray hair up here in the industry. So I have lots of deep connections in the LP community, which is often a good source for introductions and referrals from peers. But I also recognize that you have to be willing to look in some unconventional places to find emerging manager talent. So I am very much open to introductions from anyone, and no matter how they find me or how I find them. Maybe it's LinkedIn, maybe it's a conference, but we're willing to source from sort of all avenues and all channels. I think the other piece is we at Pivotal, we really want our process to be collaborative. So across the organization, we have the relationships to flag companies and funds, again, given the intersection of the fact that we're deploying philanthropic capital and investment capital out of the same organization. Sometimes interesting opportunities may come across the desk of one of my colleagues or partners elsewhere on the team, and they're able to flag that for me and my colleagues on our investment team to dig in. And then I think it goes without saying, conferences, dinner series, speaker series are a fantastic way to connect with emerging managers. And I have met and made several investments coming out of gatherings like Raise and others. So for us, that's a key part of our sourcing channel, in addition to the things I mentioned internally and externally.
Thank you for the Raise Global LP portal plug. Very much appreciate it.
The portal is great. I can't stress, even after the annual gathering, which has been virtual, obviously, with COVID, I still log onto the portal to gather information on GPs that are there. So that doesn't stop just when the event stops.
Fantastic. Can you help us understand how you think about portfolio construction across your fund investments at Pivotal?
When it comes to portfolio construction, I think the number one question I'm trying to answer and think through is, where does a fund or investment strategy sort of fit in that broader portfolio? Is it meeting an unmet need across some of the dimensions that you asked about earlier in terms of geography, sector, et cetera, stage as well? So similar to, I'd say, to GPs, as you're investing and building your portfolio of companies, you're trying to manage different dynamics. It's the same process on the fund portfolio construction side, not wanting to over-index too much on a given type of strategy or a fund with the exact same or similar investment thesis. One other question I'm trying to answer from a portfolio construction standpoint is, what is the fund's edge? And again, how that sort of fits in across those other dimensions that I mentioned earlier. And that edge applied across really three different elements. One is sourcing, two is the strategy itself, what is your thesis? And three is the stewardship or value add. So if I see something that jumps out as differentiated across those three dimensions, that's another piece, again, that we're looking to layer in and understand as we're starting to build the portfolio.
I love the emphasis on stewardship, because that's when all the hard work just begins after you've actually made the investment. Exactly. That makes a lot of sense. Thinking to when GPs come and pitch you for the first meeting, if there were one piece of advice you could give them, what might it be?
Oh, one piece of advice to give a GP. Where do I know? Where do I begin? No, in all seriousness, I'd say probably three things that would jump to mind. One is doing your homework as the GP on us as the LP. Because again, I'm going to be doing a little bit of my homework in advance on you. So sometimes I'm a bit surprised when fund managers, show up for a meeting and, are asking some questions that imply that they're not quite familiar with our strategy and approach. Now, I say that recognizing that many LPs, you don't have a lot of transparency sometimes into, who we are and what we do. But I do think as much as you can do a little bit of homework in advance, always good. And then the second piece of advice I'd say is being really tight and clear and able to articulate, why you're doing this, is why you're investing in this space, why venture, why early stage, why this sector, why this geography, and being very, very clear about that, and what really is motivating you, what problem you see or you want to solve, and why your mousetrap, again, back to that comment around edge, is better than the next guy or gal that's going to be coming onto my screen or into my office immediately after that. And I think that's so key, where a lot of times we'll have just a 30-minute, I often will take 30-minute introductory meetings the first time I'm meeting a fund manager. And if I hang up the phone and I am not able to just parrot back sort of who you are, why you're doing this, and again, what makes you different, in my mind, there you failed. So I would encourage GPs to sort of have that framework in mind, and more of the elevator pitch, candidly, honestly, thinking that, if we get cut off, have you delivered the key talking points on your fund and your strategy enough to get me interested to want to dig in more?
That's really helpful. So it sounds like being succinct in your vision and your fit, particularly around credibility from backgrounds and motivation, is critical for you.
Exactly. No, spot on. It was so much of this in investing in venture funds generally, but venture and early stage investing particularly. These are long-term relationships where it's a marriage. It's an analogy that's often used. We're going to be sitting alongside each other for a decade plus. So I'm trying to, as quickly as possible, get a sense, as you were saying, of who you are as a person, what your motivations are, and again, why your process and strategy are different and going to deliver, again, for us at Pivotal at least, on our impact goals, as well as great financial returns.
Very helpful. And then let's go a bit more into the diligence process itself. I'm very curious to hear what makes you dive deeper into diligence after that initial call or meeting. It's what everyone wants to know.
Yeah.
How do I get the next meeting?
How do you get the next meeting? How you get the next meeting, I think, is an excellent question, because, as I said, I am very much open, and part of our role, I think, in this ecosystem, I'm happy to take an initial 30-minute, 45-minute call with anyone that comes across our radar to be helpful, get to know them, connect them potentially to other interested LPs. But as you're suggesting, it's a limited number that make it to that second meeting, that third meeting, that fourth meeting. Part of what is really driving that desire to go deeper, I think, is, as I mentioned earlier, having a very clear sense of where this strategy, again, has an edge across those dimensions that I mentioned earlier. And some of that work is done as an investment team at Pivotal. We come together weekly to debrief all of the meetings that we've done over the prior week. So we're looking at sort of who we've met, but also just who's more broadly in the market, what's in the pipeline, almost a forward calendar of sorts that we're managing, and trying to see where there are gaps in our portfolio, and sort of, again, whose strategy and thesis is sort of emerging that could fill one of those. So I think it's, again, a lot of it is what's the most kind of compelling story that we've heard. What makes you stand out and look different relative to others in the marketplace? Because, as we all know, there are a lot of funds in the market today at any point in time. So what are you going to do to stand out in that regard? Acknowledging the fact too that we're also managing our own portfolio construction, as we chatted about earlier. So sometimes, even if I'm maybe super compelled by the GP and the strategy, if we have something like that already in our portfolio, maybe are we just committed to a fund that's very similar, the fit may not be there. Odds are, though, if you're sort of hitting on some of those characteristics I mentioned, you'll probably still get a second meeting, even if we may not be in a place to invest in this fund cycle, as an example too.
Mm-hmm. So what makes you fascinating and stand out and a fabulous fit at this moment? That's a hard equation to meet. You mentioned construction strategy. I know many emerging managers that I'm talking with are constantly grappling with the importance of staying disciplined to the ownership goals of their construction model, at the same time that they want to get access to hot deals that may, by definition, only allow lower ownership positions. So I'm curious if you can share your lens on ownership strategy, particularly in the early years of emerging fund managers in funds 1 or 2.
Yeah. No, Joanne, you hit on it. It's such a difficult needle to thread, because, as I mentioned earlier, part of one of the things I'm assessing is your ability to source, right? And so sometimes getting into a hot deal can show great sourcing talent and access. But I weigh that against the strategy piece as well. And I'd say, to directly answer your question, my bias is to show that discipline. I think the consistency in executing the strategy and showing your ability to, again, sort of repeatably and sustainably do that is what's going to resonate and over time, right? In fund one, have you done what you said you were going to do as you come back to fund two, fund three, and beyond? That said, though, I think particularly as you're noting that tension for emerging managers, I'm not suggesting if you have a really great, compelling, hot deal that you can get access to, that you should let that pass you by. But I do think if you're going to pursue it, you have to be very clear on the reasons why you're doing it, or even why you passed. That's a question I have often asked in diligence as well. Where have you passed on something? How have you shown again that discipline? And what are the benefits that making this investment are bringing to you and to the fund, and ultimately potentially to us is LPs, right? Because again, if you got a little lower ownership percentage than the model might dictate, but again, this is going to be a beachhead into the sector that you're doing a deep dive on and are seeing some really interesting opportunities. You can develop a relationship with that founder that might catalyze other opportunities down the road. That could make sense. But if it's just the hot deal and I was able to get in and that's kind of it, that's much less compelling, and I think a repeatable, frankly, of a strategy to execute against.
Duly noted. My next question is, what advice would you give a first-time fund manager without a formal investment track record?
Oh, that is a great question, and I think one that, again, as we're seeing more and more, which is great, and I think to the type of ecosystem building we're hoping to do at Pivotal Ventures, seeing more folks coming from different backgrounds into venture. You may not have spent a decade plus on Sand Hill Road, rising through the ranks with an auditable, repeatable track record, right? So I get that. I think those that are serious about investing in emerging managers get that. But that said, I think you have to be able to do two things. One, find your advocates and sort of build relationships within the organizations, the LPs that you're targeting, and some of that, to your earlier question about taking that first meeting or that second meeting, it's being really persistent and I think trying to sort of tell your story and get people comfortable with that background and experience that, again, may not be an auditable track record of dozens of companies that you've invested in. I'd also say, though, another piece, and institutional LPs, one thing that we're trying to assess is we want to see sustained performance over time, right? Like, we're signing up again for long relationships, hopefully, and we want to have a sense of your ability to repeat and deliver results. So again, if you've just recently started investing, or maybe you've done some angel investments, or you're coming more as an operator, it's hard, right? Because we've been in a market that's gone just like this, so straight up. So it's much harder to sort of see and articulate, I think, different market environments and your ability to sort of deploy capital through those. So I'd advise a first-time manager to sort of think about probably these few questions that I know as an LP I'm trying to answer, to sort of get a sense of your skill set and ability to deliver long-term great results. One would be how do you operate or behave in difficult pressure field type situations, right? Because that's where you're gonna find yourself with a founder when the company's going sideways or in a difficult board situation. So that would be one question. Two, what have you learned from mistakes? I am shocked when I sit down and talk to GPs and first-time managers and I ask that question and they can't answer it. So that is one that I think you should be very well prepared to talk through. And again, it doesn't have to necessarily be, it could be an angel investment you did. It could be a company that you were advising or supporting, but it's more about how you think, how you react, how you navigate through difficult situations, which are going to be present as you're building and managing your portfolio of investments. And the last thing is, I think, be willing and able and very forthcoming with references on lists, but also recognize that a lot of LPs are probably going to go off list as well, and understand that, I think, in the absence, again, of maybe a formal investment history, the LP is going to want to spend a lot of time getting to know you and how you show up as a person and whatever role you've been operating in previously. So choose your references wisely, but then also recognize that your LPs are probably going to go off list and comb LinkedIn to see who else they know, who may know you, and talk to those folks as well.
Mhm. That is great advice. It also probably makes sense to really calibrate your list of target LPs. We know just from the data over the years that, especially if you're working on a first or second time fund, if you really don't have a demonstrated high performing track record yet, it is a better use of your time to spend the bulk of fundraising with high net worth individuals and family fund offices. Of course, it takes some meetings with the institutional investors that you aspire to have longer term relationships with, but go in with managed expectations around how likely it is for them to come into a first close or a first time fund.
Correct. No, I agree with that 100%. I think being very targeted and where you're focusing, and again, knowing who your advocates are within an organization, but just broadly, like you were saying, Joanna, like who are the types of investors that are going to be best suited for a fund one or a fund two, and plugging into those networks that can get you access to those folks, again, via conferences, speaker series, other events. Half the battle is finding those, because that's where I'm going to show up. So if you're there, odds are, we can meet and start those conversations with the type of capital that's willing to move potentially quickly in that first close or be in that first fund.
Follow-on question, Erin, how do you underwrite new teams and partnerships? And you mentioned it before that you will invest in solo GPs, is that correct?
That is correct, yes. Sure, so this for me is, I think the most fun, one of the most fun parts of my job is getting to know the team and understanding those dynamics and those partnership dynamics, because it is so important. And I've sat on the side of the table where it's gone great, and I've also sat on the side of the table and made investments where it has not, and the partnerships have not worked and have not survived. So I'd say assessing and understanding team dynamics is definitely more art than science. So there are a couple of questions that I'm trying to answer and assess. One, the previous working relationship of the partners, how they came together, how far back they've known each other, why they're coming together to launch this fund, how complementary their skill sets are. Those are the types of questions I'm trying to get at around the working relationship and dynamic to get a sense of the strength of that foundation that's in place. Two would be internal dynamics, how decisions actually get made. And again, what are some of the maybe obvious but then non-obvious power dynamics that could be occurring across a team and in a partnership, even of equals, 50-50, trying to understand, is there one more dominant personality in the room that's going to override the other partner, or how they truly work together and make decisions. And then the third thing would be assessing the commitment of the partners and the team to growing the business for the long term. I think foundational to that is this is a business, right? As a fund manager, again, I want to know if you're a good investor, right? Can you source these great companies, execute the strategy, and steward the capital, as we discussed earlier? But beyond that, can you actually manage a business? Are you good at fundraising? Are you going to have the right operational team behind you? Can you recruit and retain and develop talent? Those are all questions that I think over time, day one for a first time fund, it may be a team of 2 or 3 people or one person even, but understanding that vision for the longer term is the third sort of leg of the stool of what we're trying to assess. For solo GPs, the questions are not too dissimilar per se, but I would point back to more of that kind of vision and what support system you have around you as an investor. What networks are you a part of, or communities are you a part of to check yourself? And again, maybe not having that partner or team to bounce ideas off of. How do you recreate that to make the best decisions and source the best companies as a solo GP? That's definitely a question I'm trying to answer. And then how that translates to the broader expectations and vision for the business and the platform beyond that fund one or fund two, bringing on others over time.
On a more sad or negative note for all those emerging fund managers out there, by the numbers over the years, you've had to say no most of the time. But for those who are naturally optimistic and hopeful, when you have said no, but then you've changed your mind, what is it that changed your mind?
You're right, Joanna. We say no way more than we say yes. I think that's true of every LP for better or worse. I'd say when I've changed my mind, it's probably been probably in one of two areas. One where just we as a team or I as an investor maybe didn't quite see the market opportunity or the thesis that, again, I was being presented. For whatever reason, didn't resonate with me or with, again, a current need in our portfolio. And watching that fund invest out against that thesis, sort of seeing, wow, I was wrong. I missed the boat on that type of company, that sector, et cetera. So I'd say that's sort of one place where maybe I've changed my mind, where our assumptions were sort of wrong about a space. But that implies that the investor has been consistent and sort of stayed in touch. And so I think that's where, I'm very much willing to see someone who, we may have said no to today, but they've gone out and done what they said they were going to do and have gotten results or starting to show as much as you can with a fund 1 to a fund 2, maybe as an example, very much open and willing to revisit those opportunities and maybe engage in deeper diligence and have done that over time.
Persistence and performance sounds like the answer.
It's so simple. That's literally, what we're all probably, if you had to boil it down, to the two essential things, we want to have repeatable results over time.
Makes sense. Can you switch gears a little bit and talk about, every GP-LP relationship is unique, but in general, would love to hear in your words how Pivotal Ventures is prepared to be a value-adding LP.
The check for us at Pivotal, the capital we're committing and investing is really just one piece of how we show up. And I'm hopeful that that's the case for other LPs investing in emerging managers as well, because I think to support and really launch these funds beyond that first fund, you have to be willing and able to do a little bit more than just write the check. So for us at Pivotal, that value add, I think, comes in a couple of ways. One, using our network and our voice to support our investment partners. And that could be something as simple as picking up the phone to review a list of targeted LPs and provide some candid feedback on, to your comments earlier, Joanna, around who's actually serious about investing in emerging managers. And then the next obvious step from there is me willing to pick up the phone or draft an email to make that introduction and use a little bit of my personal capital and our personal capital as Pivotal to talk up our book and support our GPs. So, because it works both ways from my perspective. When I hear from someone that I trust as an LP, that the GP, that the fund manager has been a trusted partner to them, that's a great signal through all the noise that we're hearing and seeing out there. So we try to do that as best as we can as LPs, and I would hope others do too. I think the second piece is, again, using our voice, as I said, our brand, where we can, to connect and partner and amplify the work of our investment partners. So whether it's mentioning our name in a press release, or having a quote from someone on our team or our principal even, or showing up at an annual meeting to speak about our commitments and why we're backing this fund manager, we're very much open and willing to using the full sort of toolkit of tools at Pivotal Ventures from a communication and branding standpoint as well, to elevate our investment partners so that they can achieve their success and, again, deliver those great persistent returns.
Well, I've seen you in action as a value-adding LP, so couldn't endorse that advice to other LPs asking that question. So thank you, Erin. Well, this has been a fabulous conversation. As always, you're very candid, approachable, and very specific, which we really appreciate, those learning the ropes and building their first or second time fund. So thank you again for your time today, all of your feedback, and also for everything you're doing for the Raise community. Now, second year veteran, looking forward to seeing you at the conference itself.
Thanks, Joanna. Really a pleasure to chat with you today and excited about the event in the fall. We'll see everyone there.